wanted to know, what do you consider big time frame and small time frame? Like big obviously is like 1 day, 1 week, 4 hours. So what do you see as small time frame?
Okay, so I'll consider something less than 12 hours more time frame. The reason why I'm putting 12 hours because 12 hours is crucial. Sometimes I don't even use a daily time frame. Sometimes I use just 12 hours because most of the time when the first 12 hours or the last 12 hours print a candle is often crucial than a lot of 1 days. So most of the time when the candle finishes 12 hours ahead already in a day, the likelihood of that candle finishing like that same day uh, is high.
Oh,
So
all right.
yeah, so probably ideally smaller time frames are like 1 minute, few seconds, 5 minute, 15 minute. Again, I use 15 minute a lot because during the small time frame, 15 minute also does something good because a quarter of an hour. And I like that. I like the 30 minute. The 30 minute is good. I like the 1 minute. I like the 5 minute. But something like an hour H1 is good as well because it indicate that a full hour has closed, right? So, but all this again, you use this for just temporal moves. Use this for just temporal moves.
All right, all right. So, just to follow up on that question and clarify, does the time frame and the candle printing apply the same like to every trading session, like New York session, London session, or Asia session?
Say that again. I didn't quite get what you asked.
So, is the volume in the market
Uh-huh.
the same during New York, London, and Asia? And which one is like the best to like trade?
So since I'm in the United States, I trade New York, but I would say New York is the best. But sometime the volatility that comes out of sometimes I make some most of my money from the volatility in the Europe session because by the time that Europe is open, probably New York, people are just waking up here. So sometimes people you wake up, you get that move before the New York open, but New York actually has the largest volume. That's what I see. Maybe I don't trade the other session a lot. I don't know. But when I trade, when I look at the chart, I see that when New York open, most of the time, the volatility and the volume, the trading volume is always high. So yes, I would say when the market is making a decision, so long as New York hasn't react to it, I wouldn't really conclude that move yet until New York react to it.
All right, all right.
Yeah, but most of the time, sometimes seeing New York close late is the last session to close. Most of the time, maybe when something happened later during the day, I'll probably take that more seriously. I'll take that more seriously than waiting for the other session to open because probably the volume that came from New York was high. So again, like I said, depend where you are, depend what you're trading. Sometime again, some good trade comes from Asian time, Europe time. But just know that if you're trading and maybe uh, you're really skeptical, you wait until New York open and you actually see the direction of where the market is heading.
All right, makes sense, makes
Yeah.
sense.
We have two hands up. Okay. Yes, Elisha, unmute yourself and ask your question. Elijah. Yeah, he's not there. Banga, Banga, is that your name? Unmute
Yeah.
yourself. You can listen.
So are you getting me?
Yes.
Uh, uh, so you spoke about the the hanging man and the hammer candle. And you
Yeah.
said these are candles that mostly appear to indicate the end of uptrends and downtrends. But most of the times, I always see those candles in the middle of trends, and I don't know how should we consider them.
So again, that's why I make it I differentiate it that okay, these candles. Okay, let me say one thing. They said they represent, it doesn't mean that they must appear just in the downtrend, but most of the time, for you to even call it a hammer, you see that it's happening towards the end of a trend, right? Maybe I wouldn't even call it a hammer if it happened just in the consolidation phase. Maybe it's something else, but that doesn't mean that it wouldn't happen there. I didn't make the rules, right? You just trade the high probability. You don't trade that alone by itself. You trade that combined with other factors. So if let's say you were in a downtrend and you think that because of some other factor, you think that the trend is coming to an end, and then you started seeing a hammer, started seeing an inverted hammer, yes, the probability is increasing. You're having more confidence in taking that trade, right? So maybe just ignore it if you see it somewhere that is not having a trend. Did I get your answer? Did I get your question? Did I answer your question? Hello? Uh,
Understood.
yeah, Julius, unmute yourself and ask your question, please.
Okay, so as I told you, I'm new and I will ask my question. So let me just ask some clarification.
All
You
right.
said trading is based on that is in happen in pace. For example, when you want to trade like maybe um, let's say such as euro and US dollars,
Mm-hmm.
you trade them in pairs.
Mm-hmm.
So when you're going for trading, are you really like, for example, if I'm going like I'm doing, let me say I want to go to the market or to this, and then I want to trade euro and US dollar against US
Mm-hmm.
dollars. Does it mean that when I'm there during the trade, I can either buy or sell?
Yes, it depends what the chart is telling
Oh,
you.
okay. Because I was thinking that if I'm going, I can decide I only want to buy. But it depends now. If from your clarification, it means that you can either buy or sell.
Mm-hmm. So again, like we
Okay.
said, when you buy, meaning that you're expecting price to go up, right? You're expecting, if you're buying the dollars against the euro, right? Mean that you're
Yeah.
expecting that the dollar will rise against euros. How much is $1 compared to euro? I don't have it at the top of my head. Let's actually pull a chart real quick and show you guys something to your trading view. All right, let's do Forex. All right, so yeah, that's euro to dollars. So click on this chart and open your super chart. Okay, so if you think right now, if you think right now, uh, the euro is going to fall against dollar, right? Euro is going to fall
Yes.
against dollar. You sell right here. On when it goes down, you make money. But if you think euro is going to rise more against dollar, you buy right here. As it go up, you make money. So again, you can trade it in any direction, either up or down. Just depend what you see on the chart. Depend what your bias is. Oh, I forgot to mention something. I'm recording on my computer, Dr. SRD. I don't know the other definition of your name. I'm recording here, so I'll send the recordings. So yes, it just depends on what you want to do. If you want to buy or sell, depend on what the chart is telling you. If you think the dollar is going to fall against euro, you sell. If you think euro is going to keep rising, you buy. And when it actually take the direction that you wanted it to go, you make money while that direction, why the price moves towards that direction.
Okay.
Thank you.
Then um, there was this. Somebody asked about the time frame, the timing.
Yes.
I wanted to ask, do you go to let's say to do your trading at any time, or maybe there's a time? For example, you said the New York Stock Exchange opens at this particular time, or maybe do you go there you can go to trade at any time?
So that's why the last meeting I told you guys that the reason why I prefer crypto because it's open 24/7, so you can trade it at any time. But as for Forex or stocks or other market, you need to wait until that market is open before you trade them. So yes, you cannot trade. You can trade at any time if you are in a 24/7 open market. But if you're in a market that doesn't open, that open only a particular time, you have to trade at those times. The reason why I say New York stock market open right now, let's open a chart for stock market and you see it's already closed because they close 4 p.m. Eastern time. This is the time where they close. So let's take NVIDIA for example. It closed here today at 4. Let's put H4. Yes, this is where the chart closed at. You see it's not moving at all. If you even put a small time frame, 1 minute, you see that was the last candle at 4 p.m. So it doesn't close, it doesn't work when it's not open. So something like crypto, this chart is always moving. It's always moving 24/7. It's always moving. So you can trade this at any time, just depend what you're trading and where you're trading at. I think we talked about the different type of market and when they open on the last meeting, right?
Yes.
Yeah, any more doubt?
No.
Thank you. Okay, who also do we have here? Doctor.
Hello, Prof.
Yeah, unmute yourself and ask your question. Yes.
Absolutely. Okay. The time you said the short time trading, like maybe daytime trade, you said 5 minutes. Is it 1 minute to 5 minutes? Something
Can
like that.
you say that again? Let me understand what you're trying to say.
I mean, when you want to put a trade which will last for a very short time, let's say for 5 minutes or 1 minute.
Right.
I saw you changing and it's giving us like different graphs.
Yes.
Is it that when you want to go for like the 5 or 1 minute, there's a high risk because the display was not too clear that you can read and get the right information at
Yeah,
that particular time?
yeah, it's just like they said, money not the make noise, right? It's just like they say, the
Yeah.
smaller what is happening within 1 minute here. Yes, is it possible that it happened? Yes. Okay, like for instance, just within the past few minutes that I've been doing this class, there has been a lot of trade that happened here. You can argue this was a double bottom that happened here. This something we call a double bottom. We'll get there. Saying this is your other bottom and this another one. And the target is from this neckline to the lowest point of this. And you put that up here and you reach your target, right? That's a trade. Now you can also tell that this is a potential, this is a double top that happened here. And this is actually a retest happening here. So if the price get here first, the people that shorted here get stopped out. And if the price doesn't, then this target you measure just like I said from here to here, and you target, you put your line down here. wherever it ends, that is where your price is. Just that's a small time
Okay.
frame. Mean that you're reading 1 minute, you want to see what is happening within the next second. So this type of trade, you call them scalping. We'll come to those type of traders soon, and we'll talk about type of traders, and we'll show you guys different times that they use. You could use seconds as well, but I'm not on the pro plan, so you could use seconds and really see what is happening within seconds. Means that you don't even want to sit in a trade for a minute. Use 5 minutes, 3 minutes, 10 minutes, whatever. I mean that one of these candle is happening within 5 minutes. So it take 5 minutes for one of these to end. So it will take a little bit of time. This one is more better than 1 minute because it take a little bit of time for one candle to form. And
Okay.
that is what I was using on this chart actually, and it's still actually playing out. This is the invalidation. So long as price doesn't invalidate this area, I still think price get above here and then ultimately above here. But 1 minute is not telling me like that, right? 1 minute is probably telling me that, okay, this is about to go down. 1 minute is already telling me that there was an area here. Remember, I told you guys when you get a chart, map your area of interest, map your area of support and resistance. Once price break below or above one of those area, know that that's where the price has decided to do. 1 minute already broke below here, retested it, make its direction, right? And now it form another direction. It wants to go back up. So within just 1 minute, it's been a lot happening. It's been a lot happening within just 1 minute time frames. But 5 minutes, 3 minutes will even look different. 10 minutes will look different. 15 minutes will look different. So 1 hour will look different. Let's put 1 hour. 1 hour look totally different. So this happens only after 1 hour. Now you see we put 1 hour, all that stuff that we put become like nonsense. It's invisible. So you see that there was a lot of noise happening within this time. But 1 hour, what are you seeing on 1 hour? Just this small green stuff that is still happening. But if you look at 1 minute, it will show let's put 1 minute, it will show you that a lot has been happening for the past 1 hour. So yes, I don't know if that was still related to your question, but
Yeah, you explain a lot, but so now if like you have a position where the minimum loss
mhm,
and the where you expect to have profit, right?
yes,
Do you put that automatically that if it reaches here, it takes action at that particular point?
yes. I think
Or
we'll have a class on that. That's why, okay, I told you guys this is something that you use to determine your target. Say, since this has printed something like a short, right? Remember, this is a game of probability. You trade the higher probability. If you want to short this, you put that over there, say that, okay, if the price reaches there first, it stop you out, right? If the price,
yes,
let's put this down here. I'm trying to increase it. So, okay, say you're using a market order. Remember, I told you guys market order is an order where you ask the market to execute uh, to uh, execute or to you ask the market to execute immediately at the current price. So if you right now you just say you want to short this thing, right? And say if the market reaches up here first, stop you and close you with what? What is the risk reward ratio here? It's 1.72. Let's put it to 2. Let's say, oh my gosh. Let's say you're asking the market that if the market get here first, stop you and you lost 1, but if you get here first, you win 2 of what you're risking to lose.
okay,
So it's just that it's not really something big. You put it automatically unless you are a professional trader where you are trading something and you see like, okay, if the price get to a certain level, maybe you have sized and positioned yourself so well that the money that you're using to trade is just enough for where you should get stop at normally. And there's something we call liquidation price, and we'll talk about that soon when we get to our other classes. It's called a liquidation price. And liquidation price is a price where the market automatically sells your order. Market automatically sells your order you don't if you didn't put a stop. So market automatically sell your order if you did not put a stop. All right. Please let's take a question for somebody else before we get to the end of this class. Dr. Shark, what is your name, man? Please come up and pronounce
Yeah.
your name. Unmute yourself and ask your question.
Yeah, greetings to you, Mr. Fozao. Can you
Great.
hear me?
Yes.
Yeah. My question is, do we have anything like fundamentals in crypto?
Yes.
So how can we make this fundamental analysis?
So the fundamental in crypto is not it's not any analysis that you need to draw some lines for it. It's just news. Like for instance, if you let's share our screen again and show you something real quick. If you go to something like CoinGecko, this is a coin tracker that I use. This is a website that track cryptocurrencies or coin market cap or whatever. You see a lot of different coins here. Let's click on something that is trending, right? This is trending. Now you come here, you do a lot of different news. Maybe you're on Twitter, you're on Instagram, you're on Facebook, you're hearing some news about it. But sometimes you come to the website, you see what they're offering, you look at the newspaper, what do they have to offer? Do you think what should you do with this coin given this information that you've seen, right? What should you do with this? This is actually something that I used to do in the past. I never used to actually trade. I used to invest. Most of the time I use this information just to invest. But sometimes if you scroll here, take this information with you, you can go look at it yourself, see a lot of different crypto